Hi, Kevin Retcher here. Today in this video we're going to talk about the area median income increasing in 2025. This is exciting news. In our high cost area, the area median income for Home Possible, which is Freddie Fannie's 3% down program, is going from $122,320 a year gross income to $129,600. That is a over $7,000 increase. This is incredible for first-time home buyers and clients that need 3% down, 5% down, 10% down. It's going to allow them lower rates and allow them to put less money down to qualify for more house. It's also exciting in our high-cost areas. First-time home buyer status is if you haven't owned a home in 3 years and your income is under $183,400. Now that is increasing to $194,400. So this is going to allow more people to get first-time home buyer status, which will lower the loan-to-level price adjustments for like debt-to-income, LTV, and credit scores, and allow for better interest rates for even borrowers in the higher cost brackets. So let's look at how some of those numbers actually work out and why I'm so excited. Here we have the old number at $122,300, and they go off of your monthly gross income. So you divide that by 12, it's $10,131. Under the new numbers, it's $129,600 divided by 12. It's $10,800 gross income that you're allowed to be able to be used and still be in the Home Possible, Home Ready 3% down categories. Okay, so under that program, they typically allow about a 50% ratio of your max gross income to use for all of your debts. So I'm using 49% instead of 50 to give a 1% buffer. Under that, it's your total debt. So I'm subtracting off $1,000 for your taxes, your insurance, mortgage insurance, and some possible credit card debt or maybe some student loans, all taken off $1,000. If you have more, you would absolutely have to take that off of your max gross, but we're using $1,000 for this particular scenario. So your gross PITI in the old version was $3,994. Under the new AMI limits as of May 18th, 49% of 10,800 would be $5,292, and then your principal and interest that you could have would be $4,292. So it doesn't sound like huge differences, right? But when you take these numbers and back into it, if you use a 6.5% rate on both of these scenarios, the old limit would allow you to qualify for a loan amount around $631,984. Under the new AMI limits, $679,040. If you then divide, because it's a 3% down program, by 97.97, your purchase price in the old version would have been $671,446. Under the new AMI limits in our area, $715,773 on the same scenarios, using 6.5% as an interest rate, 3% down. So this is going to allow people with a little bit more income to qualify under this program all the way up to $715,000. That is a difference of $44,327 just on this 3% down program. So these AMI limits, Freddie, Fannie, FHFA, they look at the counties throughout the whole country. So you need to understand what your AMI limit is, what the 80% is, and what if you're in a 100% category or if you're in a high cost area. So if you're in an area across the country, the standard 100% is this number. If you're in a high cost area, it's the 120. And if you're trying to qualify for a Home Possible, Home Ready, it's 80% of the AMI limits, and that'll get you into the 3% down program. So all this is great news, especially for realtors. You're going to have more borrowers that are going to fit into these categories, especially into Fairfax, Arlington, around metropolitan DMV. So my name is Kevin Retcher, owner of First Meridian Mortgage. This is exciting news, takes effect on May 18th. For Freddie and Fannie, and if you have any questions, give me a call. My phone number is 703-799-5626. Look forward to serving you.